The branch manager paused. He leaned back in his chair, which was the kind of chair that swivels and costs more than most people in Harlan County, Kentucky, keep in the savings account. He looked at the man across the desk. He looked at the envelope the man had set on the desk without ceremony, the way a person sets down a receipt they've already read. Then the manager made the mistake of smiling. Not a mean smile, not a cruel one. The kind of smile a person produces when they are certain they are about to explain something the other person does not understand. The kind of smile that assumes one party in the room knows how things work and the other does not. He was wrong about which party was which. The man across the desk was named Calvin Pruitt. He was 61 years old. He was wearing the same canvas jacket he wore to check his fence line. His truck was a 2003 Ford F-250 that had gone over 190,000 miles, and he had no immediate plans to replace it. He had $714.83 in his checking account at that branch. He had driven 38 miles to sit in this office. He had not mentioned, when he made the appointment, what was in the envelope. What was in the envelope was a Series HH United States Savings Bond issued in June of 1963 in the name of a man named Chester Ray Pruitt, Calvin's father. The face value printed on the bond was $500. That was not the number that mattered. What mattered was the interest schedule, the maturity terms, and a specific provision in the original bond agreement that had been established under Treasury rules in effect in 1963, and that had not, as Calvin had spent 4 months verifying, ever been formally superseded. This is what happened next. Calvin Pruitt is not the kind of man who talks about money. Not his own, not anyone else's. That is not where this story gets interesting, though the money is real, and the number at the end of it is real, and you will get there. What is interesting is how a man with $714 in the bank walked into a financial institution with 23 branches across eastern Kentucky and sat down across from someone who had already decided the conversation was over before it began and did not blink. He had driven 38 miles for a reason. He had not picked up the phone. He had made an appointment. He had worn the canvas jacket because it was what he owned, and he was not going to dress for a bank manager the way a man dresses for a job he needs. Calvin did not need anything from the bank. He was simply giving them the opportunity to be part of the resolution before he went elsewhere. There's something about a person who doesn't have to prove anything. If you know what I mean, you'll know why this story is worth your time. Hit subscribe and stay with us. Calvin Pruitt grew up in Harlan County, Kentucky, the second of 3 boys, in a house that his father, Chester, built with help from 2 neighbors over the course of a summer in 1959. Chester Pruitt was a coal company surveyor, not a miner, a surveyor, which meant he worked with instruments and measurements and legal descriptions of land at a time when such precision was valuable to the people who needed to know exactly where coal began and ended. He was careful the way surveyors are careful. He believed in documents. He believed in reading what he signed. In the spring of 1963, Chester Pruitt purchased a $500 Series HH United States Savings Bond through a federal program that was, at the time, being promoted heavily in rural counties as a mechanism for household savings. He put the bond in a lockbox. He told his wife where the lockbox key was. He did not tell his sons about the bond because his sons were, in 1963, 8 and 6 and 3 years old, and there was no particular reason to. He did not tell them later either. Not because he forgot, because Chester Pruitt was the kind of man who let things do what they were designed to do without interfering. The bond would mature. The interest would compound. When there was something to discuss, they would discuss it. Chester died in February of 2017 at the age of 88. He had been, by every external measure, a modest man. The house was paid off. The truck was old. The lockbox sat in the bedroom closet on the top shelf behind a stack of survey maps and a coffee can with $30-some in loose change. Calvin found the bond 11 days after the funeral. He almost didn't know what he was looking at. He did know, because his father had told him once, offhandedly, in 1991, that there was a savings bond somewhere and that it would be worth looking into someday. Calvin had filed that away. He was that kind of son. The man who understood what Calvin had found before Calvin did was a retired agricultural loan officer named Paul Strunk, 74, who had spent 31 years at a federal credit union in Middlesbrough, and who played cards with Calvin's older brother on Tuesday evenings. Paul had handled bond-related estate paperwork twice in his career, which was 2 more times than most people in Harlan County. He looked at the bond for about 90 seconds. He said, "That's a 1963 HH with an extended maturity provision." He said, "Those were issued under a different interest schedule than what they moved to in 1974. He said, "You need to pull the original Treasury Circular, number 905, and read Section 4, Paragraph C, before you talk to anyone at a bank." Calvin did not know what Treasury Circular 905 was. He found it in 4 days through the Federal Depository Library System, which is available to the public if you know to ask for it. He read Section 4, Paragraph C twice. Then he drove to Lexington and read it in front of a retired federal attorney who charged him $180 for an hour and told him, after reading the same paragraph, that he was not wrong. He was not wrong. The provision, which had been written in 1963 to encourage rural household adoption of savings bonds in low-income counties by offering compounding interest through an extended maturity window, applied to bonds issued through a specific federal credit facilitation program in 24 counties across 5 Appalachian states. Harlan County was one of them. Chester Pruitt had bought his bond through that program, which was identifiable by a 2-digit prefix in the bond's serial number that almost no one alive remembered to look for. The compounding rate over 61 years, under the extended provisions schedule, calculated out to a number that Calvin wrote on a piece of paper and looked at for a while before he believed it. He showed it to Paul Strunk. Paul Strunk looked at it for a while. Then Paul said Calvin should not tell anyone else until he had spoken to the Treasury directly and confirmed in writing because there would be people who would want to explain to Calvin why he was wrong, and it would be better to have the confirmation in hand before those conversations started. Calvin thought that was smart advice. He followed it. He wrote to the Bureau of the Fiscal Service in 6 weeks of certified mail correspondence that produced on a Tuesday in March 2022 a letter on official Treasury stationery with a figure on it that matched Calvin's calculation within $214. He put that letter in the envelope with the bond. He made an appointment at the bank. He drove 38 miles. The branch manager's name was not recorded in any public account of this story, which is probably right. He is a reasonable man who was operating within the limits of what he knew, and what he knew did not include Treasury Circular 905, Section 4, Paragraph C. He had been managing the branch for 9 years. He handled mortgages and business lines of credit and the occasional estate matter. He had never seen a 1963 8H bond with an extended maturity provision from an Appalachian Rural Facilitation Program. He had, in fact, never heard the phrase. What he saw when Calvin sat down was a man with $714 in his account who had driven a long way to talk about a 61-year-old piece of paper. He asked Calvin, politely, what he believed the bond to be worth. Calvin told him the figure. The manager paused. He said he would need to look into the applicable redemption process. He said it could take some time to verify. He said he wanted to be sure they were working from accurate figures, because bond instruments of this age could be complicated. Calvin said he understood. He slid the Treasury letter across the desk. He said he had already verified it, which was why he had brought the letter. He also said he did not require the bank to redeem the bond. That was not why he was there. He was there to open a conversation because the bank held his existing accounts and he had thought it courteous to give them the first option. He had an appointment the following Thursday with an institution in Louisville that specialized in Treasury instrument redemption, and had agreed, after reviewing his documentation by certified mail, to process it. The branch manager read the Treasury letter. He read it again. He picked up the phone and called someone. Calvin could not hear, and then he came back and said he thought they could, in fact, assist, and he apologized for the initial confusion and would Calvin like some coffee. Calvin said he was fine. He did not take his jacket off. The bond was redeemed in April of 2022. The figure on the final redemption statement was $11,340,000 and some cents. Calvin does not discuss the exact amount beyond that, which is a habit that, when you understand who he is, makes complete sense. He paid off the farm, 88 acres in the eastern part of Harlan County, which had carried a small balance on a Worcester Farm Service Agency loan for 11 years. That was $34,200. He set aside a portion for each of his 2 nieces who are in school. He gave a sum to the local volunteer fire department that was enough to replace their oldest pumper truck, which had been held together for 7 years by one mechanic's continued patience. He kept the rest in accounts he will not specify. He still drives the F-250. It has crossed 200,000 miles now. He says he'll get to it. Paul Strunk, who started the whole thing by recognizing a two-digit prefix on a 61-year-old Bond serial number, got a check that Calvin will not describe the size of, and Paul will not either, and that suits both of them. Chester Pruitt's lockbox is still in the house. The survey maps are still in it. The coffee can is still on the shelf. Calvin says he's in no particular hurry to sort through the rest of it too. He said it once to his older brother in a way his brother repeated later at a family gathering in a tone that suggested he found it both funny and not funny. There might be more. Chester Pruitt spent his career measuring things precisely, writing them down, and trusting that the measurements would hold. He did not know his son would spend 4 months in federal document archives over a coffee can inheritance and a two-digit serial number. He did not know his bond would compound for 6 decades under a provision that most bankers had never read. He did not need to know. He bought a document he believed in, and he put it in a box, and he trusted it to do what it was designed to do. Not amazing, not shocking, not a miracle of any kind. Just a careful man who read what he signed, and a son who knew enough to keep looking. The bank got their coffee.